Friday in the great state of Idaho in August. Looks like it's going to be a little bit cooler than last time I talked to you guys. Hey, I got about 4 items for you today. All are pretty darn important. First of all, let's talk about foreclosures. Once again, everybody's saying the housing market's going to crash. It's going to crash. So I've got some good data for you. So first of all, CoreLogic brings out this form each and every month. This came out on the 8th, I think, and it shows delinquencies and foreclosures. So we can see that May 21 over May 22, we're down, and then overall foreclosures are stable, and typically foreclosures stay around the 0.3% across the United States anyways. But you can see that foreclosures are definitely low, and we can further look at this because I've got some Fannie Mae data. Ginnie Mae data. So Ginnie Mae is, they do FHA, VA, and rural development. I don't have any Fannie Mae or Freddie Mac data. And this is May, so it's a little bit older, but it's always a couple months behind. But anyways, this is Idaho specifically. This is 30, 60, 90-day lates in Idaho. Of course, anything over 90 days is considered a foreclosure. And then it also shows us how many foreclosures have happened. And so as you look at this data, we have May 22 to April 22, and then May of 21. So a month-over-month change, and then the year-over-year change. So 30-day lates, up 7, 60-day lates, up 16, and that's month-over-month, and then 90-day lates, up 4. The year-over-year change, so May to May, you can see they're significantly down. And this was a lot to deal with the foreclosure prevention the federal government came out. Again, I don't believe that we'll go into a 2008 to 2015 issue again with foreclosures because the government stepped in before and the government will step in again. And you can see foreclosures in Idaho over the last 12 months or so, 2. So that's 2 either FHA, VA, or rural developments. So it's really, really odd. So what this data tells me and how as a realtor you can present this data is we are not seeing anywhere close to any type of crash or foreclosure in the market at this point in time. So that's always really, really good. Hey, let's talk about FHA really fast. FHA on July 12th brought out a new memorandum. This is the actual memorandum there. And basically what it says is it says that appraisals were good for 120 days. Now they're good for 180 days. So what does this mean for you as a realtor? So typically, when an FHA appraisal is completed, it's put into the FHA system. And let's say you have a seller and they had an FHA appraisal done on their house and it came in low. And then the buyers canceled that. Then you go ahead and put it on the market. You have to keep in mind, though, that more than likely you cannot accept another FHA offer because that appraisal is in the system. Prior to June 1st, that was in the system for 120 days. Now an FHA appraisal is in the system for 180 days, i.e. 6 months. So that could be quite interesting. And this was, I just had to educate a real estate agent on it on last Tuesday. And so I thought I'd bring it to you guys today. 180 days, appraisals are in the system. So make sure you watch out for that. Couple things. I'm going to talk about rates really fast because this is kind of important on this one here. Rates have continued to improve. This is this green line, and the green line, or the bottom green line, shows an improvement. But what's been happening with rates is we're getting into what's called a pennant formation. This is actually very, very good for rates that we're seeing this pennant formation. And I'll give you a little bit of quick explanation. So this is a topper, this is a bottomer. When rates get squeezed or bonds get squeezed, they typically or statistically will follow the trend of the longest line. So in this case, the longest line is an up line. Remember, on this chart, going up means interest rates are going down. We're seeing another pennant formation. So you can see this pennant formation, they went up. This pennant formation, we should see a breakout Monday, maybe Tuesday, we'll have to see. And then if it breaks out, it's going to break up higher. The nice thing about this higher is the next top is 120 points above where we're at right now. 120 points means almost a half a point of interest savings. So make sure you're really watching out for that. We're probably in a little bit of a float mode right now for the next couple days. We'll have to see what the breakout is. With that being said, we should really talk about rates and shopping rates. This is a realtor that had some clients. They went and locked a loan with a retail lender, and then they thought something was funky with it. The next day, Grant, this is the next day, they called me. We were able to get them significantly lower rates. There is a huge price war going on right now in the wholesale world, and they are just beating everything. We typically beat all rates anyway. Sorry to say that, but it's honestly true. But in this case, we smoked the other lender on this one here. These are identical loans, identical lock periods. Everything is identical on this one here. And you can see not only did we beat them in the interest rate, but we also are able to shop mortgage insurance around. We saved them $20 a month on mortgage insurance too. With that being said, thank you very much. Hope you guys all have a great and wonderful weekend. Try to stay cool and enjoy.